So what an Austrian would say, looking at these data, is that, in fact, it was the recession caused by the Supreme Court decision that put into place mandatory collective bargaining and caused an increase in wages. Okay? It was that recession that brought about an increase in excess reserves in 37 and 38, okay, after the recession had already begun, because recession was was a 37, 38 recession, that caused a fall in the money supply. Okay, so banks were increasing their excess reserves, and as you increase your excess reserves, you decrease the money supply. But that was in reaction to the fact that businesses weren't doing well during the recession. So, what's the conclusion? My conclusion, then, is that the Fed's monetary policy, except for brief periods, notably during 1928-29 and 1936-37, okay, when it did turn disinflationist, it didn't really cause a deflation, but it turned disinflationist, or very, very mildly deflationary, okay, it was, outside of those two short periods, it was consistently inflationist from mid-1921 to the end of the 1930s, okay, and I believe, and I think other Austrians that follow Rothbard believe, that disinflationism was the cause of the Great Depression, and one of the reasons why it was so protracted, because you didn't allow prices to fall to their natural levels and the economy to adjust. Okay. So I'll stop there, and I'll take any questions on this. Or on, yeah.
In Rothbard, he's talking about in 1981, to get the gold back in private hands, it could be $676 for an ounce of gold, or if you got into demand deposits, then you're going to have $1,696 for an ounce of gold. What's your guess what those numbers should be?
Well, right now, I was looking at it last night because I'm going to talk a little bit about this afternoon. It would be over $4,000. If you want to back up by 100% all currency and checking deposits, forgetting about savings deposits and other components of what the Austrians call the money supply, simply back up 100% currency and checking deposits, you would we have about $1.2 trillion of currency and checking deposits in our country, in the U.S. economy. You would divide that by what I believe to be 260 million ounces of gold that the U.S. government is holding, okay, basically in the New York Federal Reserve Bank, and the quotient of that is $4,000, $4,080 or something like that.
Does that take care of what I call demand deposits?
Yeah, that would back up both currency and demand deposits.
And that would eliminate the downward push on prices and so forth.
In fact, there would be see there are different plans, and we're going to discuss it, but the transition to the gold standard can be something that's very difficult, because if we suddenly raise the price to $4,080, all the gold in the world, gold in the rest of the world is selling at $350 or $400, would flow into the United States. We'd have a massive inflation, a once and for all massive inflation. So that may, at this point, that may not be the best way to do it. We'll talk about a plan that Mises has, a plan that Hazlitt has, and also you might want to supplement the gold with silver. But that is, we know that the gold standard is the goal. That's what we want. But getting there is, there are going to be problems. Okay, and I think more research has to be done now. Back when the price of gold that you would have needed to back up everything by 100% was lower, was closer to the market price, it would have been easier. But now it's so far away from the market price, it may be very difficult. Yes?
I want to review Great Britain again during that period of 1920s. Did any of that change occur when Great Britain was trying to repay the war debts? I mean, the House of Morgan alone by 1916 had over $4 billion. I don't know when any of this came back. Were they trying to do it then, or what? Was that?
It was more, yeah.
Inflation in there? I don't know when it was made back.
I don't think that was a big problem with Great Britain at that point, okay?
I just saw that particular because the market was so entwined with Great Britain.
Right, lending the money, lending the money, right. That certainly had something to do with the balance of payments deficit. I mean, in other words, that's one of the reasons why you would lose gold. Okay, or that's one of the the balance of payments is equal to the balance of trade, the difference between exports and imports, plus the capital account. So if you have to make payments on the capital account, that's going to add to the deficit if you have a deficit on the balance of trade. In other words, to pay back on your capital account, you have to run a surplus. So they couldn't run a surplus because their prices were so high relative to the rest of the world. Okay, they were buying more from the rest of the world than they were selling to the rest of the world because of their high prices. Okay, so you're a bad place to buy from, and you're a good place to sell to. And if you're trying to go back on a gold standard at overvalued parity, you're going to be losing gold. And the U.S. wanted to help Great Britain by raising its own prices. So Timberlake is completely wrong here by saying that, in fact, the U.S. was trying to help Great Britain by having the Fed trying to deflate the money supply. Okay, and as I mentioned, Kenneth Weyer, the other monetarist that I cited, pointed this out, that in fact inflation was the way that the Fed chose to aid Great Britain. Yes?
I've heard Benjamin Strong called a traitorous Anglophile, and I'm wondering if there were any U.S. interest in his move to help Britain out.
He was a close friend of Montague Norman, the director of the Bank of England. I don't think they call him the president. I said that wrong. I believe it's director of the Bank of England. And he was an Anglophile. Okay. Now, you're saying, did he have any monetary interests?
Did the U.S. have interest in doing that, or was it just to help out Britain?
Oh, did we have legitimate interests? No, I think as the ordinary citizens certainly didn't have an interest in helping Great Britain out. Okay. What Great Britain could have easily done, which they refused to do, was simply to go back to gold at a lower parity. Okay. So in other words, devalue the pound to reflect the fact, devalue the pound by 10% to reflect the fact that prices were 10% higher. Okay. So in other words, raise the price of gold in terms of the pound, which means that now each pound would contain less gold. They didn't want to do that because they thought it would be a loss of prestige. So the U.S. was trying to help them, or Benjamin Strong in particular was trying to help the British reattain their position as sort of a financial center. Okay. Yes, Dan.
I'm not sure if this question should maybe be held off for the next question.
Well, ask it and
Okay. If we recognize that gold historically became